Good morning, everyone. Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching markets with Santo and CJ in association with M Stock by Mirae Asset. Well, it's a brand new week, but it looks like the same old story, Santo, as markets are headed for a weak start yet again. If you look at the Nifty futures on the Singapore exchange, they're indicating a flat to largely negative start for the Wall Street at this point of time. The Asian markets, which started the day in the green territory actually, have now turned into the red zone. Apart from that, Wall Street ended mixed on Friday, even though there are still persistent fears about growth and recession. The Nasdaq index was able to bounce back while the Dow Jones and S&P still ended around on a very patchy note. The good news, however, for our economy and for inflation, Santo, here is that oil prices have cooled off significantly. I mean, we saw almost 5% drop in Brent crude oil futures on Friday, and even today they have started off on a weak foot. So clearly, Santo, the sentiment at this point of time is a little of a break after the sort of selling that we have seen last week, the worst week since May 2020. Now, the important thing is that we are now about 2 to 3% away on the Nifty and Sensex, Santo, to entering that so-called bear market that you have been talking about. We'll technically enter the bear market in Nifty and Sensex after more than 2 years. For me, I feel that, we are edging closer to that point of maximum pain, that you always, tell me about. I think that there has been good correction now. Earlier, when S&P and Nasdaq were down 15-20% and we were just down 7-8%, we were still skeptical about, but there could be more pain. But I think now we have seen a good correction. We are almost entering a bear market, and this could be an opportunity, to probably go a little contrarian according to those Warren Buffett quotes that you always talk about.
Well, CJ, it's quite interesting. On one hand, prices have corrected so much, but at the same hand, a lot of investors are still not willing to let go, in the sense that they're still sitting on decent profits, and that's giving them some confidence, probably, that maybe we can still try and play out for the bounce. So there is no signs of capitulation yet. Of course, prices have corrected, but there's still no signs of capitulation. That said, I think mid and small cap shares are likely to struggle for some more time, because once the first
that is where the capitulation has happened, Santo. Don't you think? I mean, compared to the larger cap stocks, which everybody have been talking about, you should rush for safety and all. I feel small cap and mid caps probably are entering into value territory given the sort of correction.
Yes, but when you say capitulation, you just dump the stock at any cost. That is when you see some huge, some crazy obscene correction. You're not seeing that kind of crazy selling in.
I mean, some people will call 50-60% drawdown an obscene correction, if I may call it so.
No, the point I'm trying to make here is that when you say panic, it means that people are just selling the stock like there is no tomorrow, and that is something we're not seeing yet. But that said, when the earnings season sets in, it's most likely the maximum disappointment you could see will be in small and mid cap stocks.
That said, Santo, I think individually, of course, some counters are doing quite great. I mean, yes, largely most of the stocks that probably you have in your portfolio have taken a beating, but individually some stocks are looking up. And starting off with Santo, one on your list.
Titan, well, the stock has been among the major casualties in the recent market sell-off. Though I think at this point it's more of technical factors which are weighing in the stocks. You're seeing some unwinding of leverage positions. Besides that, I think there's also the concern that investors have about expensive valuation. This is the kind of market where investors are having second thoughts about anything that's really expensive. Titan fits in right there, close to about 70 odd times trailing 12-month PE is expensive by any stretch. That said, there's also concerns whether the company will be able to execute what it has promised. Already the company itself mentioned that it's facing stiff competition as far as the gold business is concerned, and which is the major part of the business anyway. It's facing stiff competition from unorganized players who are now resorting to price wars. And also remember, because of hallmarking, now it's difficult for Titan to charge the kind of premium that they used to in the past, and wherever they're making charges, they are running into competition from other unorganized players as well. So this is a stock, I think right now the sentiment has changed a bit for for the stock, and that's why probably you could see some pressure in the short term.
I disagree, Santo. I disagree with your assessment, at least on the valuation front, because I feel that the sort of selling we saw yesterday on Friday, the 6%, more than 6% drawdown on the stock, it just felt like it was more panic driven than driven by fundamentals. If you get what I'm trying to say. I mean, you look at what Macquarie had to say today in its note, and they said that according to channel checks they have done, demand trends still seem quite healthy. I mean, yes, there are concerns around inflation, whether people in the rural areas, maybe semi-urban areas, will be willing to spend money, or even in the urban areas will be willing to spend money to buy jewelry and all. But it seems, according to Macquarie, the demand trends are still quite healthy. Apart from that, you talked about valuation, Santo. I feel that valuation actually, on the other hand, probably could be depressed, because right now the P ratio, or the price to earnings ratio of Titan, is close to or even below probably their 5-year average. So that goes to suggest that clearly there has been a lot of selling on the stock, lot of correction on the valuation front. So I would probably not be so skeptical about the valuation argument there. Apart from that, the hallmarking bit, probably yes, in the near term there could be a little bit of competitive issues there could be margin issues there, but in the longer term, hallmarking is actually good for Titan, right? Because now a lot of the unorganized players probably will not be able to afford the extra cost that entails hallmarking. You already know they try to avoid taxes and all that, and therefore a lot of these players will not be able to remain in the market going ahead. And I think that is where the opportunity lies for a company like Titan, wherein they can easily, I mean, without even growing the revenue pie, they can easily get a lot of revenues by taking off market share from a lot of these unorganized players. So clearly, I mean, this could be, this sort of a correction that we saw on Friday could be a good entry point for a lot of long-term investors, at least.
Well, who knows, CJ?
Well, one stock, another stock where I feel that probably a lot of the recent selling has been a little unjustified is CCL Products. Now, this is a company which is involved in the coffee export and import business. Now, the stock could, going ahead, show some strength, given that the earnings outlook for the company is improving. The last quarter, it had taken a beating largely because the Russian business had come under pressure clearly after the invasion of Ukraine by the country. Now, at this point of time, the management is aiming for about 40% growth in sales and around 15 to 20% growth in volumes in FY23. This is despite the grey clouds over the Russian business, which was a significant share of volumes for the company. Apart from that, Moneycontrol Pro also believes that longer term, or investors with a medium to longer term outlook could look at a stock, given that realization for the company's green coffee products could go up in FY23. Clearly, this is one company that is benefiting from the tight supply in the coffee market. Brazilian coffee supplies have been hit. So clearly, it is likely that a lot of the customers abroad are going to prefer companies in countries like India and Vietnam. And let's not forget that CCL Products has a factory not only in India but also in Vietnam. So clearly, it can take double advantage of the situation, and therefore probably the recent correction for me, Santo, could be could be worth looking at the stock at this point of time.
Well, the stock has taken quite a bit of a beating over the last couple of months, and also when I look at its both inventory as well as working capital days, there's a sharp rise there also. Besides that, CJ, look at the longer term picture. Last 5 years, top line growth and bottom line growth, nothing impressive there really. The company does seem to have potential, but the growth in both top line and bottom line have been quite gradual, just about 10% for almost 5 years now.
That is also because, Santo, the coffee market was so depressed, right? Because supply was abundant, you had abundant supplies, and you had probably demand was largely stagnant or stagnating. I mean, over the past 2 years, of course, there has been a humongous rise in demand because a lot of people shifted, to work from home. That clearly led to, more beverages being drunk, coffee demand going higher, but at the same time there have been environmental issues in major producer countries like Brazil. So clearly the dynamics of the markets have changed over the past 1.5 to 2 years, and I think that is why we had seen, last year we had seen a lot of coffee growers probably benefit a lot from this move. Yes, even some FMCG players also, I mean, companies such as Tata Consumer Products were also benefiting because they were taking price hikes on the coffee products as well. So clearly this is one market where, of course, it's a commodity market, so clearly it's going to be cyclical in nature. But at this point of time, it seems the dynamics are favoring producers more than the consumers for me. As far as inventory days are concerned, Santo, I think that is probably more a strategic move by the management. If you go by what Moneycontrol Pro had to say, they believe that probably given the supply chain issues that have been persistent, the management is trying to keep a higher inventory level just to negate those sort of challenges.
Well, Britannia, the next stock on our watch list, has been among the better performers in the FMCG space. Again,
safety first, huh, Santo?
Safety first in this market, CJ. What else do you do? Stock, it's hard to be positive on most stocks from a near-term perspective. Well, so much of the portfolio of the company is in the premium segment, and that's one segment which has not really been hurt much. And besides, brokerages tracking the company say that its strong cash reserves is putting it in a much better position compared to many of its peers. So this is a stock one needs to watch out for.
Santo, I would probably not be so optimistic about outperformance on this. So yeah, you may be able to protect your capital, protect your downside, but if you're looking for upside or outperformance in this market, I doubt Britannia is going to provide you that, given that valuations for the stock has already factored in a lot of the positives. So therefore the upside technically, just if you look at it from a near-term perspective, I think the upside is going to be limited. If you talk about fundamentals, clearly there is down trading happening in certain segments of the consumer basket, and even some of the the well-to-do basket is also taking a hit at this point of time. Yes, in the near term volumes may rise because well-to-do consumers tend to buy in bulk during inflationary periods so as to avoid higher prices later, but that could then affect your volume growth in the coming quarters. So clearly I would not be so optimistic about on the volume side, as well as the margin risk also persists. Yes, some of the commodity prices have come down, but we will have to see, because we had the same inkling before the Russian war happened, and clearly that risk remains. Apart from that, the rural demand story for me is something that is still looking quite patchy, especially if you look at the sort of Rabi crop yields that people are talking about, a correction of almost 5 to 10% in Rabi crop yields that could probably delay the revival in demand in rural areas, Santo. Clearly these are the risks that I think would keep me a little skeptical on Britannia going ahead. Next, one stock that, yes, today I'm in the mood of value buying, I don't know why, but one stock that looks like a candidate for a near-term short covering for me is Infosys, Santo. Clearly, the stock has taken a beating. Probably not as much some of the mid-cap IT names, but among the larger cap IT names, clearly it's one of the stocks that has taken a lot of beating this year. Growth concerns clearly have been visible. There have been talk of US recession, EU recession, overall global slowdown, but it seems to me that probably a lot of the price action has factored in these sort of risk at this point of time. There is some skepticism around the FY23 revenue growth guidance of 13 to 15%, but I feel that going by Infosys, or even if you talk about Parikh's own trajectory, he has always been a very conservative guy. So if he has conservatively started at 13-15, I think he would probably expect to at least achieve that growth target in FY23 for me. And if you look at the sort of commentary that has been coming out from a lot of these managements in their annual report, in the analyst meets that they have been doing, it clearly seems like demand has not been affected so far by what is happening in Russia and Ukraine, as well as US inflation scenario. Apart from that, we should not forget that the rupee has depreciated almost 4 to 5% this year so far. That is probably going to offset a lot of the margin issues that these companies have been facing on the talent side.
Well, on the demand part, CJ, I'm not so sure, because see, the probability of a recession in the US seems to be rising by the day.
Yeah.
That said, at this point, okay, the companies may have committed to certain orders, but let's say things get worsened down the line, then probably it might be a different picture altogether. I think something similar was seen in 2000 also. Even at that point, those who were bullish on IT stocks would always say that the sun will never set on this industry, and no matter what.
But they were right? In the long term, they were right.
In the long term, they were. But there was intense period of pain for the next 18 months. Maybe you may not see that kind of pain right now, because the valuations clearly are not obscene. They may be slightly expensive, but it's hard to call them obscene compared to what it used to be back, what they used to be back in 2000. That said, still, there is reason to be slightly cautious, and according to CLSA, IT sector in general could face some currency crosswinds in the near term. And about the point, just before that, let's quickly take a look at the market. Nifty has opened in the green today. this morning, 60 points up.
Surprise, surprise, huh? Surprise.
And about 1100 stocks are higher and close to 700 are down. Good market breadth as well, CJ.
Yeah, I mean, this is the sort of surprise that I like, Santo. You know, clearly a 100-point jump in the bank Nifty at this point of time. About 1139 stocks higher on the NSE, and about 680 stocks declining on the NSE as well. If you look at the Nifty mid-cap index as well, they have also started off the session largely on the flat to positive note, clearly underperforming their large cap peers at this point of time. So probably your point about these mid cap and small cap stocks trailing the larger cap peers continues and underperforming continues. But some of the big gainers, Santo, on Nifty mid cap, you look at Oil India at this point of time is actually down 4%, clearly reacting to the decline that we have seen in crude oil prices. But Ashok Leyland, Apollo Tyres, L&T Finance and India Bulls Housing are the top gainers on the Nifty mid-cap at this point of time.
Well, on the issue of Infosys, so according to CLSA, the depreciation in rupee, it doesn't really significantly change the outlook on the sector. It might give some kind of a short-term reprieve, but it's not really a game changer. I think the bigger play right now is on demand, and that is where I think, CJ, there are concerns. The last stock on our watch list today is Sun Pharma. Now, Jefferies has given a double upgrade to the stock. It had an underperform rating on Sun Pharma. It has changed it to buy with a target of 900 rupees. According to Jefferies, the company is expected to report strong growth both in its specialty chemicals business as well as the India business. Now, three of the drugs, one is Ilumya, which is for psoriasis, Sequoia, which is for dry eyes, and the third one is Winlevi, which is for acne. All these three drugs have been doing pretty well and are expected to be the major growth drivers for Sun Pharma going ahead.
Well, Santo, I'm just not convinced, by Sun Pharma's specialty drugs business probably offsetting the possible decline or price erosion that we are going to see in the base business, which is already existing business in the US at this point of time. Yes, the specialty business has been coming on its own recently in the past 3 to 4 quarters. We have seen a steady rise in the the sales run rate for that side of the business, but clearly I think that the company needs to bring in more products into the market to really make this side of the business take over the the generic portfolio that they have in the US. Apart from that, as far as the India business is concerned, I think outperformance probably will not be that much of an issue, given that the market itself is not expected to grow more than 9 to 10% or 11%. I personally feel that probably they will be able to just about outperform or match that growth going ahead. Apart from that, keeping the fundamentals aside, the technicals also do not look very, very great on Sun Pharma. Clearly, there is, indication that near term or the near to very near term could remain very bearish for the stock, given that most of the technical indicators on that side indicate a lot of selling pressure ahead.
Well, two things here. One is that, this again from the Jefferies report, that the US portfolio, is not as large as compared to some of the other pharma companies, and also, for the last 2 years, it's been largely this extraordinary items which has led to profits taking a bit of a knock.
It's the US subsidiary, Santo, that has always been a headache for them. Teva Pharmaceuticals, the sort of price erosion that they face in their dermatology products, clearly that has always been a headache for the company.
So this restructuring of the operation and also settling of some of this litigation probably should see the company reporting better earnings going forward.
Let's see. I mean, I hope you are right, but I have my doubts about Sun Pharma.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching this, and do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your news, stay tuned to moneycontrol.com and the Moneycontrol app. We will catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session. It clearly seems like we are probably in for a good session finally after a dreadful week. So have a good day ahead.